Hey everybody, welcome to Tradeism Group. Today I'll be providing like a recap basically to how yesterday traded. It's going to be for June 27th, and I'll be explaining my reasoning behind some of the trades that I've been taking, and using it for today's trading and how it's going to be relevant. So as usual, I like to stick with like my highs and lows of previous days, and I'll just draw that out at the beginning here. As most of you also might not know if you're new to the channel, I like to use the previous low and high of the overnight market, and I also like to use the lows and highs of the open market as like an example for my next trading day. So I'm going to draw out those levels for you all to see, and then explain why I drew out these levels. So from uh, 6 p.m. until 9:30, right? These are the general highs and lows. So this right here is the high um, of overnight market from 9:30. This is the highest it's been at, and this is the lowest price. So I drew out two horizontal lines for that value. And then just over here, I drew out the high of the market that printed around 9:30 to 4 p.m. That's like the overall market. So I drew one right here at the top, and then one at the low. And then all of this will be like a reference to my next trading day. And as you can see, the market's already broken much higher the next day. So right now I have my next reference level just at the high of the market at the moment, the current high. And then since we don't know what's at the top of the range over here from 20,140s all the way moving forward, we actually want to look way back much further into the market time frames to and then look for the highs and lows of these specific days so that we have like a great example of where the market can head to, um, and then where the support is going to be. So, or the resistance as well. So anything overhead will be resistance, anything below will be support, and then those are the levels that I'll be using to help me out process my trades for the next day. A lot of you probably don't know, um, just because like I was like jumping the gun earlier, and then like I had one of my close friends basically give me a couple tips on how to like provide more of like an understanding for beginner traders of how I took these trades, and basically like for myself, like I've been doing it for a long time, so it's like it's really easy for me to comprehend the candles and how to trade these candles very specifically based on what I see. And so I guess as a starting point, this weekend around like Saturday, I'll actually be making a more condensed video with regards to like having each of these candles being read properly, and how to like process these, how the buyers and the sellers work, and hopefully it'll help anybody that's new to trading, um, using this like using my guidance as like a way to navigate the markets. So as for now, I'll just do like very like a general explanation on basically why the trend played out as it is, and yeah, let's get started. So as you already know, I already drew out the previous references and everything. Um, this was the overnight market. This was like the open market of yesterday, and this was the overnight market of yesterday. I'm just gonna like also draw the highs and lows of the market from the day before as well. So, and I'm gonna be using that as a reference point, just right over here. And perfect. So as you can see, Around the pre-market of the day, this was the pre-market. This was from 6 p.m. 6 p.m. to 9:30 a.m. is the pre-market. We had some news come out around 8:30, just around 8:30, and just right here, 8:30. And as you can see, this candle by itself, it kind of means that there's a combination of the buyers and then the combination of the sellers who are trying to find a direction. And this is like considered as a bear candle, and the one next to it is considered as a bull candle. So from taking a look at this, as you can see, with this red candle, it doesn't really tell you a direction of like where the market wants to go. But based on that minute that you spend looking at this candle would have been moving to the upside. And then the reason why there's this large candle wick here is because the buyers basically try to push above that, and at that moment within the 1 minute candle, the buyers actually failed to push it any higher than this value here of 19,987.50s. And then basically what happened is that the buyers failed it, and then it came back down, and then the sellers tried to take control of it as well. And around 19,953.25s, basically the sellers also failed to take control, and it got pushed back up to around 19,966, which is what creates these two wicks from the top and the bottom. Right after, as you can tell, this is how the candle started originally. It actually started originally with a lot of buying, so it got pushed up to the upside. Then it sold, and it looked like it was getting pretty heavy. By the word heavy, it means like sellers are like trying to drop it, and the buyers are kind of losing, so it's kind of heavy, right? But then we also consider something that's pretty light and looks like like it's very easy for our buyers to push through. So I just kind of like look at it as a heavy and a light concept. So right now, when the buyers were failing at this value and the sellers were overtaking the buyers, basically the candle um, sells off, and this is what it creates that long wick for. So at the 8:30 news, we had buyers push it, we failed it completely, and then as we come back down, the sellers were trying to break it below one of the fundamental levels from a few days back or from yesterday, from a couple days back here. There's like a fundamental level somewhere here. So for example, this right here will be a fundamental support, and you could have actually drawn this out from the beginning, but right before news, of course, to understand where the market direction was. So we broke below that fundamental support, and then afterwards it retraced back up, and that's what happened. Um, but yeah, for that candle, basically when the candle opens up, it opens up at this specific price right here at 1997, and then right here at the bottom is considered as the close. So basically it means that right when the 1 minute value, for example 831, hits, the market opened up at this price for the buyers and the sellers at 19,966.50s. This is the open. So like it's the beginning of the candle, like the very beginning of the candle. So it's like at the T, it started at 19,966 50s, and basically at the very end when the candle closes, it'll be right here. So for example 19,988.75s, the candle closed directly at this value, and basically buyers were able to hold it at that price. So that's how it works, right? And then just over here, basically it means that sellers, this was the selling open, and then basically this was the close. So sellers were able to hold it at this price a little bit, and it created a red candle. So that's why sellers were able to hold it at that price. And just right below, this is the candle for this is the wick. Basically, the seller's trying to push it, but the seller's lost, right? So the buyers push it back up. We had like a little tiny support right here, as you can see with these other candles, and yeah, right after it opened up, it just pushed it up upside from there. Yeah. So as the trading went on from 8:30 until 9:30, as you can see, this was like a reference point of the high. It was also correlated with the previous trading day. As you can see, this was the resistance in some manner. So around the morning, around like 9, we started getting a little bit of resistance, a little bit of selling here. And as you actually play along with the trend and everything, this is what I was planning out from the beginning. I was just waiting for the trend to play out here. I didn't really trade it that much because I didn't know exactly where it's going to be heading. I did take some short, so I did take some stuff where I would trade it to the downside. My reasoning was very small. Like there wasn't actually a specific strategy with that. It's just me having to understand how the sellers and the buyers are doing their thing, which I'll be explaining over on the Saturday in like a more in-depth video on each of the candles that traded through, and I'll be explaining the analysis part to it. But for now, I just explain the simple candlestick idea behind it for you all to learn. So just right over here, we developed a support, right? And then like a pennant of some sort. Originally, we were coming through here, we were gonna get like a thing called an inversion. So basically, the sellers were able to hold it at this value. We pushed back above it, and then the sellers pushed it back below. And then basically, having to take a short right here would have made sense in a manner because you can tell that they weren't pushing it towards one of the resistances around 20,000 tens or 15s or something like that from the previous day. And I took that short just to try to basically get a nice retest of the low here of 19,955s, the low of this candle, because we saw here theoretically that the buyers and the sellers weren't able to hold that. So I think the buyers were taking control temporarily, and then basically the sellers would push it back down to this value, because right here was around 8:30 was more indecisive. It's they both had control at this value, so that's why I took that short. And that's the thesis that I had in mind when I took that. But that didn't really come true, so it started pushing higher. It printed a high here. Right around this break of the level, I actually would have taken long, but I missed the opportunity just for a small profit. That's what a scalp means. Scalping means you're taking small profits for small measured moves, and that's how a lot of people actually make their money as well. And for myself, I like to scalp. I'm also very good at holding breakouts as well, and then going long. So breakout means, for example, as you can see with this trend line, this is the resistance, and when it pushes outside of that resistance, it means that the buyers are in control, and we'll get a nice measured move to the upside with that breakout. And then I also draw the support just right here. If we broke below this level, this would have been a good short opportunity for the breakout to the downside towards 19,955s. So yeah, the market basically broke out, and the reason why I drew this pennant to begin with was because I let the market play out. One of the biggest things is to let the market play out. So if you're unsure about what's happening with the market, you always want to wait it out, maybe 32 an hour, to see how the trend plays out, and you'll be able to form some sort of pennant and then use that as a reference towards these kind of breakouts. So I just waited and waited and waited. It broke out right at this level. I took a long, and then basically I took a profit just at 2008 or something like that, just around this range. And then after that, you can see the market just kept breaking higher and higher and higher. We hit a little bit of like selling at this value, which is why the candles were showing a little bit of indecision just at this price. And that was from the high of the market from the day before that. So that's used as another reference level. And as you can see, I'm switching back and forth or something like that. There's like other things called time frames. So basically, each of these candles um, goes from like 1 minute. It could also be a 5 minute candle. So basically, there's gonna be five candles comprised in this 1 minute, um, 1 minute setup. This 1 minute this one candle right here is comprised of 5 minutes, and basically, it just like makes it look a lot cleaner. But for myself, I trade with the 1 minute specifically, and the reason why is because I really understand the theory behind each of the candles, so I use that as to my advantage basically, and then I'll be able to day trade with that, right? A lot of people like to trade with 5 to 15 minute candles because it just makes them feel more comfortable, and they're trying to like find the basic levels and everything. For myself, I just like take scalps and I'm just trying to get paid for the time being. But later on, when I have a bigger account, I'll be looking for like bigger moves as well. So yeah, we pushed up to the highs at this value, came back down, um, kind of broke the support little bit right here, and then this right here didn't really, this one right here didn't really make sense. It's kind of hard, um, but after like we kept pushing higher and higher and higher and higher. You just want to like be able to take profits at these current levels. You can take profits higher, but you can also have like a thing called a stop loss, and then just like kind of like trail it. So as the market's moving higher, you can just grab that stop loss and start trailing it per candle. And yeah, that's the best way to profit on these moves up, basically. And a lot of people do that, right? They'll get into a buy position right here. They'll put a stop loss just right below the market at 1990, 19,989.75s. They'll go long right here at 20,000 ones. It'll push higher, and then basically the weight, they'll maybe grab their candle and then push it to break even, which means that like you're basically putting it at where you're buying it at. So if the market sells off and it hits that, you don't lose anything. And that's what they do. So as they push higher towards the 20,016s, and we gradually sell off a little bit here, and then we start pushing higher, we would move the stop loss to this point. We wait for the next candle, and then now basically at this bottom of this candle, we've secured a profit. So even if it hits that, um, we're still going to be in profit of about from 20,000 ones to 20,009s. We're still in profit of about 8 points. And then you just wait for the next candle to play out, and as it plays out, it goes higher, and then it closes out, not really pushing below to this level here. It doesn't push to 20,000 eats. You move the stop loss higher, and you move it higher, and then you move it higher, and then move it higher, and then move it higher, then move it higher, and then eventually we get stopped out. And then this one right here would have been 20,070. That would have been like your take profit, I guess, in a manner, if you're trying to follow the trend and try to maximize the most that you can get out of it. Um, as for this day, well, we could have easily done that and just kept on trailing the stop and profit on every single candle basically, um, through this move up. And unfortunately, I was not trading this day. I only made about like $550. So it's like basically, um, just give me a second here. Sorry about that. So basically, um, you'll be able to draw a pennant right here as well, like the overhead resistance, because of the previous references here. As you see, the market sold off really hard, but then within this range of what we drew out from a couple days ago, as you can see, this would have been a good level to start considering to take long, because this is where the indecision happened, and it's like a good risk to reward in my opinion. So you would take like a long just around these two bottoms here, because this is considered as the support. maybe even over here was considered as the support. It's very minuscule, and not a lot of people understand that thesis specifically, but you can definitely do it, and you can even take a support, like a buy it right off of this level here, technically as well. Um, but that one's for another day. We'll talk about that later. Um, but yeah, basically I took a long right there at 20,000 1450s, and then I set a stop loss just right below this candle. And then luckily, it pushed up, and I made a profit off of this one. I made um, about 1.5 off that just from holding it. And right after that, as you can see, we got a little bit of resistance. We pushed down, um, and then it just curled a bit. So this is the thing called curling. So buyers pushed it at this value, they came back down, and then they pushed it back up towards that overall overhead resistance. But it doesn't guarantee that you'll be able to get to this level. A lot of the times, like the market will push, they'll make it very unpredictable. So this right here is a little bit more for professionals, with like understanding the candlesticks and everything. So I'll just like use like a couple things. So if you wait long enough, you'll be able to basically draw out the overhead resistance and then take safe trades with that actually have like a fundamental strategy behind it. And this would be the fundamental strategy behind that specific trade. So you would go with the low here, you would go with the high here, you would go off of the bounce, and then as you can see, right after the first reference and the second reference, you'll actually have a complete pennant, a complete resistance, and a support on this. And then that's going to be used as your reference when it breaks out. You can go long right here and put a stop loss just right below 20,063.25s. And if it gets hit, then it just means that if it gets hit, sometimes like the market will sell off a little bit harder, and then it'll get hit, and then it'll start going higher. But usually, more often than not, if it breaks out and then it hits your stop loss, I like to keep my trade fairly clean there and not really do anything more than that. And then I'll look for another opportunity. Sometimes, the market will push up higher, even stronger again, and then I'll try jumping in, and then basically it'll fall down one more time, and you get caught. Like you don't want to get caught in those kind of trades. So you just gotta wait for it, get in long, and then set a good stop loss, and then just let it play out. And a lot of the times you'll be able to profit. Sometimes I'll take the profits at the high of the highest value during the day was around 939, and I would take a profit around like 20,100s or something from this entry of 20,072s, which is quite a bit. And yeah, so that's how I played out with the beginning day of the trend, and later on the day, we broke out of that little trend just right there, getting in long, pushing to the highs, and then as you see, it's 20,117s. This was the high at that time. Um, I drew this out only after we got a market sell off, so I don't draw out the highs until it's reached its capability. So yeah, the value of this, it basically dropped. Um, it fell below the line right here, the resistance of some sort, and then we tried to retest that, came back down, started doing a thing called consolidation, which is like usually one of my favorite things before to see the market reverse back to the upside. So we're going sideways again. We sold off. We got to that support, that fundamental support level again. So right around these levels would have been a good idea to take long, take a profit around 20,031s, just around this candle. Do the same thing again and buy down here, sell here, and then just buy here and then sell like whatever you want to do, and then just set a stop loss below this each time. Since it broke below it, now we have another reference level. So we broke below the level here, and then this one right here was kind of unpredictable. This one could have easily broken down much further than it is now, just because it was showing us that sellers were in control, and I was talking about that before. This one right here is an indicator that there's buyers and sellers in the market, and as you can see, we pushed high, we pushed down really strong, we pushed high really strong, we pushed down really strong, and then we pushed back down to this fundamental level that we were talking about previously. And the only reason why this was used as a reference is because around 8:30, this is like the most thick. Like this is basically like a lot of like buyers and sellers are coming through because it's institutions. the institutional sellers at this value, which is why it's important because that's when the news released. It's at 8:30. So we bounced off of that though, luckily, and we were just pushing. We're continuing higher, um, and then just around this point right here, this range, we saw that there was a lot of buyers who pushed higher, and then as it comes down, we know that there's like, buyers at this level. We could have easily taken a long here, and then set a stop loss just right below this because we're going to use that as a previous reference. And the market was grinding a little bit higher, higher, and higher, and then eventually you'll be able to take profit maybe just around here, 20,007, which is the prior um, high of the overnight resistance. And yeah, so that's an easy move right there, taking profit at that value from the support down here, or even taking a profit at 1992s. And the reason why is because we had sellers at this value, buyers try to push it, sellers pushed it down, etc. So everyone's got to work at their own risk and to reward ratio, and you can always move your stop losses up as it continues higher. So you're not limited to taking a profit right away. You can always just follow the trend very gradually with your stop loss. And then for the rest of the day, they basically just traded off these two levels, and they were used as reference points. Um, this was the high of the open market a couple days back, and yeah, that was the play. So push above it, we push back down, we take a short, and then over here you take long, just because it's like shooting underneath a little bit, and yeah, it came back up right away. So yeah, I was like kind of anticipating for it to not push down to this level because we're kind of like consolidating here. We're getting a lot of buyers and sellers in here, so it's like very equal amounts of that, and yeah. So the market started pushing higher and higher and higher, and this was the overnight until 6 p.m. And yeah, for the remainder of the day, we've already actually broken over the high of one of the strongest resistances that we had a while back, and the resistance was sitting at 20,071.50. It's just right here. So if you look to your right, 20,071s, and we had like this as the major resistance for the market, and this is the overall high. So we're well on our way to the upside here. We could easily push towards 20,022s today, perhaps even go towards the all-time highs. This is based on the news at 8:30 and whether the market makers are the people that are trading the market, is the institutions basically, um, and they're the ones that decide on where the market's gonna go. In my opinion, it's gonna go higher, just because like you know buy market doesn't really go down. And yeah, that's the end of my video. I hope you all enjoy this video. It's very thorough, in my opinion, and if you guys liked it enough or you felt like it wasn't um, as thorough as like my previous videos, then just let me know in the comments of what you guys want specifically, and I'll be able to explain it more in depth over the weekend. So yeah, like, subscribe, and yeah, join the Discord if you're ever free. I already had like a couple of my buddies basically join, and someone else as well. But you're all more than welcome to take a look at it and see what my thought process is. And yeah, thanks for watching. If you guys watched this far, really appreciate it. I'm trying really hard to make this work, and to actually grow in this community as well. And it's free, because I understand, the difficulty of having to pay for these accounts specifically, and then also having to like pay for someone's Discord to learn. Yeah, I understand that, that's very like, it's not cool, people are trying to learn using YouTube, and it's a free platform and everything, and to each its own. Everyone's allowed to charge whatever amount that they want, but having to have like a monthly fee on a Discord, and I don't really think that benefits a lot of traders out there. And you know it's like yeah, you're paying for the for a monthly subscription. And like I actually back then, I was actually I joined up with like one of these groups and everything, and I just didn't see the value in it. And it's because like the person that I was talking to, or like that I joined didn't really like explain in depth on like what he knew. He just kind of like bought the market, sold the market based on kind of feeling, and it worked out for him. It really did. And I don't like I'm not saying it's a bad thing that he wants more money for himself. That's a good thing, really. Everyone wants more money for themselves. But it's just not like this is not everyone's trying to learn. Everyone's trying to make money. Everyone's trying to make a business. And at the end of it, I'm not going to use my Discord for that reason. I'm gonna do it more in like a real manner. So if you wanted more like in depth, like super one-on-one kind of thing, um, I would for that I would definitely charge for my time, but not like a monthly fee because that's gonna add up eventually. And even if it's $5 or $10 or $15, maybe even like $129 a month, that stuff adds up, yo. Like that's like a gym membership, right? And you don't need to like do that, but to each his own. I like to do it this way. I like to keep it free for everybody, and yeah. So feel free to do whichever you want. Anyways, yeah, I'm out. Thanks for watching.